In 2000, we bought an abandoned 100-acre farm in the foothills of the Appalachian Mountains. We spent years cleaning it up, built a new house, and now are trying to make it a functional homestead farm. Welcome to Red Tool House.
Well, hello everybody, welcome to Red Tool House. In this episode, I want to poke a bear with a stick. Actually, in this video, if some of you have been watching our channel, you know several weeks ago I cracked my ribs. I'd like to say it was because of something I was doing manly, something I was doing outdoors, homesteading, wrestling boars, those type of thing. It wasn't the case. I actually tripped in the kitchen and fell and cracked my ribs against the countertop. So obviously not very glamorous there. But as I was recovering these past several weeks, thinking about the issues and the mistakes that I've made in cracking my ribs, I got to thinking, how are full-time homesteaders or those considering homesteading full-time factoring in healthcare costs in their plan to homestead? Well, you know, if you think about it, there's really only 4 options you have when it comes to your healthcare coverage or healthcare costs. Number 1 is to pay cash for them, pay cash for all your costs, which not too many people can do that anymore. Number 2, qualify for a government program like Medicaid, Medicare, or CHIPS for your kids. Obviously, if you reach the retirement age, Social Security, all that stuff, you get those options. Number 3 would be pay for health insurance to help offset those costs. Number 4 would be Canadian. Well, not all of us can be Canadian, obviously, so the other 3 options are what we have to play with. For those of you that are homesteading, but you're not homesteading full-time, if you or your spouse have an off homestead income, then maybe that job allows you to qualify for a health insurance plan. And usually you see that's the most affordable way to get health insurance because your employer usually matches. They've got the ability to buy discounted policies because they're providing so many. Again, if you work for a small company, that may not be an option, or you may not even be full-time, so you're not eligible for health insurance. In my situation, I've been self-employed for 12 years, so while I'm not a full-time homesteader, it's almost like I am in a sense because I don't have the opportunity for big health insurance plans. I don't have the opportunity to take advantage of the employer match or anything like that. I have to come up with my own plan. Well, for many years being self-employed, I had a plan that had a high deductible. It was like a $10,000 deductible for the family, $5,000 for the individuals in the family, and still was about a $650 premium. But it did have what's called an HSA element to it, a health savings account, which allowed me to put money into a savings account that was tax deductible. It was actually pre-taxed income. And allowed me to kind of bankroll some cash to help cover and offset those the deductibles if I would have a need there. Well, naturally, at one time I did have a need. My oldest son, Liam, he broke his right arm one time. We were actually hiking through the woods and he tripped and fell and just placed his hand down oddly and broke his arm. He didn't need surgery on that arm, but the bill was still about $9,000. Now, with that plan that I had, the first $5,000 of that $9,000 was my responsibility, so I had to come up with that cash. The other $4,000 the insurance company covered. Well, so that met my deductible for that year. Well, a year or 2 passes, Liam breaks this arm. This time, this break needs surgery. So that bill was about $17,000. So again, in that insurance, I had to come up with the first $5,000. The rest of that was covered by the health insurance. So that plan was very helpful. Yes, I'd love to keep from paying $5,000 2 times, but if I didn't have health insurance, then that would have been $9,000 plus $17,000. That'd have been $26,000 out of pocket. So that would have been pretty tough to handle. Well, I promise you I will never get political on this channel. That has absolutely nothing to do with homesteading. But since the passing of the ACA, my insurance plan that I had became null and void. It was not an option anymore. So, in looking at the Affordable Care Act, I've discovered it's really not that affordable. It was actually more expensive. In fact, I was just for the sake of shooting this video, I just looked up real quick to see what my premium would cost. And it would be about $900 a month to even get down to about a $3,000 deductible in our area, which is a real drag. And that's individual deductible. So that really doesn't work for us as well. Well, what I ended up doing, and this is maybe if there's an opportunity to give some advice in this situation for those of you in this same boat, or where you're thinking about your health care coverage, thinking about what you can do if you decide to homestead part-time or full-time and you don't have health insurance. Well, we looked at bill sharing plans. And these bill sharing plans are kind of interesting. They're not technically health insurance. In this situation, this plan, I have about a $500 a month premium, and I have a $300 deductible for the whole family. So it's a much, much lower deductible. It actually starts to make sense when it comes to paying for some health coverage. But what happens is I don't actually write that premium to an insurance company. I write that premium each month to a different person that I'm told to write it to that has medical bills that they've accumulated for their needs. So in that situation, if I would use Liam's broken arm as an example, if his $9,000 right arm bill would come in, I wouldn't technically have health insurance. So the hospital would be like, okay, you don't have health insurance, what do you have? Well, I have a bill sharing program. Okay, well here's all the bills. Here's $9,000 that you have to pay. I would submit that to this bill sharing company, and that bill sharing company would tell everyone, okay, everybody sends your premium to Troy until his bills are paid. Now again, there's a lot of trust that has to be involved in that. There's a lot of pros and cons, and I'm not saying jump ship wherever you are and give this a try. You definitely need to do your homework on this. You need to talk to somebody who's using that specific bill sharing company and vet it extremely to make sure it's on the up and up. Now, I'm not sponsored by the one we use, but I will mention their name. We use Samaritan Ministries, and I do like it. I've had multiple friends that have been on it way longer than we have. One friend's had, his wife's had 2 kids since then. Since being on the plan, they've covered everything. It's worked out great for them. Knock on wood, we haven't had any medical emergencies that require me to use it yet. But Samaritan Ministries is a faith-based bill sharing plan. So it has some requirements based upon your faith and profession of faith and how you conduct your life. So that is part of the application process you go through. But I've been impressed with it so far. I really like it. The big thing I like is I like that I'm not writing a check to an insurance company that's worried about bottom lines and profits and all that type of stuff. I'm writing a check to somebody else that has some bills that need to get paid. So I feel like 100% of my money is going to help somebody else with their medical needs. Again, research it big time if you're going to look in those areas and check that out. So what did I end up doing for my ribs? That may be the obvious question. Well, those of you that have a little bit of medical experience or know the situation with ribs, there's not much that can be done. Unless you've poked a hole in a lung or damaged some internal organs, which obviously I wouldn't be sitting here like this if that was the case, then there's really not much you can do. They just tape you up and tell you to manage your pain in however ways they allow you to do that. Well, the advantage I had, and maybe this is a plan for you or not, I wouldn't bank my entire healthcare coverage on it, but I have several friends that are in the medical profession, and so I could seek them for advice. And my buddy Doug is an ER doctor. What, he's not an ER doctor? Oh, that's right, yeah. He's an ERPA, an ER physician's assistant. He's not that either? Oh, he watches a lot of episodes of ER, so he gives me sound medical advice. No, actually, Doug is an ERPA, and he does help me out quite a bit there. So that's an advantage. So he basically told me the same thing. Troy, all we do is tape you up. If you're not having any shortness of breath, if you're not having any issues with passing blood in various areas, then you're in good shape. So I was able to dodge a bullet there. So basically, it's just self-medicate, wrap myself up, and get over it. So time has passed. So I'm back on the mend now. I'm in good shape. The whole point of this video is just to encourage you, if you're part-time homesteading and you want to go to full-time homesteading, or you're planning on quitting your job that has health insurance and you want to be on the homestead full-time, just really consider your health care costs into that plan. Don't just say, well, I'm going to be healthy, and I'm young, I'm going to be healthy, I'm not going to worry about it right now. Obviously, you're not young all the time. I consider our family a pretty healthy family. We've been very fortunate over the years, but I'm in my mid-40s now. As I get older, then just staking a claim on, well, I'm not going to get sick or I'm not going to have any issues isn't a wise thing to do. And obviously, that doesn't address injury or accidents. There's a lot of things we do on the homestead that are somewhat dangerous or very dangerous. here comes the frogs. So you can't just have a plan to say, well, I'm just going to be healthy and not have to run into it. If you are in a situation where you have an off homestead income, or your spouse has an off homestead income, and it provides a good health insurance policy, you may want to factor that in and say, hey, one of us needs to keep a job off homestead just for that reason. Until other options come about, or we all move to Canada, there's really not many other options that we can look at when it comes to healthcare coverage. Well, again, not usually the usual topic we get into, but it just got me thinking here recently with my rib issue. So if you like this video, give us a thumbs up. Be sure to comment below. I'm no health insurance expert, so I would love to see what you guys do, what you run into, what you've experienced. Again, let's keep it from being political. I don't want to say one side's better than the other, because they're all a bunch of dirtbags in my opinion, but let me know what you think. Subscribe if you haven't, and also be sure to check us out. Every Monday, Wednesday, and Friday, we post a new video at 4:30 p.m. Eastern Time. Check us out on Facebook at facebook.com/Red Tool House Farm. All right, take care, everybody.